Hello, everyone. My name is Saskia Michelle, and today I'm going to talk about the chapter three, the chapter three, and the exercise 5. The book, is a financial accounting tools for business decision making. As is required for tonight, my responsibility is to explain the exercise 5, number 5. But first of all, they require to normally the question will be to prepare an income statement and a return earnings statement for August and a classified balance sheet at August 31st, 2017. But for the exercise 5, they referred us to the exercise 4. The number 4 is still the Wolf Company, okay, and they already give us the first month's operation. Is show below. Is show in the page. I don't know if someone can see it, but I can try to explain it. They ask first for the first line. They say cash $20, and I'm trying to explain all the numbers. Cash $20 and common stock 20. Because the company is just started, they have a common stock, like the owners decide to put some money. It's for $20. So, and the second line represents that they purchase an equipment for 5,000, but they don't have all the money, so they make an like a loan. It's account they affect account payable for 4,000, and they reduce or decrease cash for $1,000, and then they create the equipment account for 5,000. The second line will be for the third line. It's for 750. They purchase supplies for $750. So they decrease cash for 750, and they increase supplies 750. And for the fourth one, they receive, they perform some services, like they receive, they have a service revenue for 9,500. But since they don't receive all the money cash, they receive some in cash for 5,100, and the other part will receive later. So they put in the account receivable. The fifth line is about they pay, because remember that they have $4,000 on account payable, so they decide to pay 1,500. And then the sixth one is 2,000. They pay a dividend for $2,000. They affect dividend in return earnings. So, and cash. The seventh line will be $800 for rent. They pay $800 for rent. So rent is an expense, though they affect expense in return earning, and they decrease cash as well. So they for the eighth line will be about account receivable. So some people came to pay, so they receive $450. So they increase cash and they decrease account receivable. They didn't affect return earnings because they already register, or I can say record this amount in is return earning already. So the nine line will be about salaries expenses. So the salary expenses, they paid $3,000. So since it's an expense, they decrease expense, like they decrease cash and increase expenses in return earnings. And then the last one will be the purchase of utilities expensive. So it's expensive, but they do it on credit. So they affect account payable and then return earning. Expenses return earning. So the balance for the cash now it's 15,500 and account receivable is 4,950 and supply still 750. Equipments now it's 5,000. Account payable equal to when we did the calculate it's the the last amount will be 2,800 and common stock will still 20,000. Revenue stay 9,500 and expensive 4,100. Dividend that would be 2,000. So we know that asset equal liabilities plus stockholders equity. So the total amount when we add cash, account receivables, supplies, and equipment, it gave the $26,000, $200,000. So we add liabilities and stockholders. It is as well 200. It is just the same price. It's 2,800 plus 23,400 equals 26,200. That means they are equal together. So now I'm going to share my screen. I'm going to share my screen now, and I want to know if we see it. Because so now since we have an explanation about the exercise number 4, for the exercise number 5, I can say all my numbers are ready actually. So I'm going to share my screen. What I did for the first question, they said, I hope you can see my screen. How can I share my screen? I'm not really good at it. It's my first time, so sorry if it's not doing it right. I just want to do something. I just want to oh, I just want to know how to I just want to share my screen. I don't know. Okay. So I hope, guys, you can see my screen. I really hope that we can see my screen. So I try to want to explain that the first question would be to prepare an income statement. As you know, the company name is Wolf Company. It's income statement for the month of August 31st, 2017. So we know for income statement, we need the revenue and the expenses. So, and the difference will be either net income or net loss. So hopefully the sales revenue is for 9,500. The rent expense is 800. Salary is 3,000. And utilities expense is 300. So the total expenses equal 4,100. And now we have a net income, so it's 5,400. So now we go for return earnings statement. Wolf Company, we still have the same information here. And we know for return earnings, we need the we need the return earning at the beginning. We need the net income, the dividends, and that will give you the return earning at the end. But since the company started in August, so they don't really have their return earning is 0. So we know we will put 0. The net income we get is about the Wolf Company. It's 5,000 400, and so and we let you we've done the dividends. So from $2,000, so we have a return earning at the end of August 2017, 3,400. So we have our income statement ready and our return earning statement ready. So now the third one, they asked us to do the work to prepare a balance sheet classified. So the balance sheet classified, we know it's include the assets and the liabilities and the stockholders' equity. So as we know, asset equals liabilities and stockholders' equity. So um, these all those information I have them since based on the exercise number 4. So they tell us the cash is 15,500, account receivable 4,950, supplies 750, equipment it's 500. So I just classify all the asset together, but I make sure that I put asset in order to be converted as cash. So cash, account receivable, supplies, and equipment. And then the total asset is 26,200. So the liabilities and stockholders' equity is the second part we have to do. We know liabilities is the not payable. We have for 2,800. The total will be again 2,800. And the stockholders' equity, we have common stock. The common stock $20,000. It is the amount that they put that the the owners put in the company. So invest, I would say, or finance the company. So and return earnings now, it is that amount that we find here. Okay. So it's I can just make a little color to see where I get them, to really make sure that everybody knows or everybody see where I get that amount from. So it is that, and then it's this amount. So it's 3,400, and the total of stockholders' equity is 23,400. So when we add the total liabilities amount plus the equities, we have the same amount, $26,200. So as you know, asset equal liabilities and stockholders. So I think we result the exercises. So if we have some question, don't feel free to reach out, and then I hope everybody will be able to understand. Otherwise, just let me know. How can I help? Thank you for watching. Thank you for watching, and see you next time.